Okay, so this is Australian dollar, the Aussie dollar, US dollar. The trend is up. The trend is up, but what we do have here, we'll just demonstrate that, is we do have a bit of confirmed divergence coming in on our MACD oscillator on this time frame. You can see there high in MACD, high in price, but considerably lower in MACD, and then it breaks this horizontal support, which confirms for me the divergence. So there is that. Now that is not a reason to take a trade in and of itself, although it worked out lovely on this occasion. If you go, like, you know, where was it it gets divergent, the confirmed divergence, confirmed down at this point here. So I mean, with full benefit of hindsight, you can go, oh well, I'm going to short that, and I'm going to, you know, you could do this and go 61.8, risk up to just above these highs, aiming down for the previous support. You can do that, works great with hindsight. In real time, you'll find yourself getting put on your ass most of the time if you get in the habit of doing that based on a simple confirmed divergence on a 4-hour chart. I find other people with a different approach may not. So that's the 4-hour chart. Well, look, you've got the breakdown in momentum. And MACD is looking bearish on the 4-hour chart, even though the trend is up. So with that in mind, we'll come down onto, it looks like, a half-hour chart. I've based this on, and there'll be a reason for that. If I'm going to trade off the 5-minute chart on an intraday basis, I do like to have my signal chart. I mean, I operate like a reference, anchor, and signal chart and entry chart theme, where each is like a multiple between 4 and 6. So if we say daily is the reference, divided by 6 is the 4-hour, that's going to be the anchor, divided by between 4 or 6. Will be like a 1-hour chart. A 45-minute gets messy, but this is a half-hour chart. And on the half-hour chart, you can see here, you can see this. Maybe it should be way down there, but maybe that's a bit. See, it gets a bit. Maybe we're going to call that. Maybe I don't know. We'll settle for that. That's what I settled for anyway. Something along their lines. So that's a half-hour S&D zone. It works on the 1-hour. Also work on the 15-minute. Using the methodology I used to draw these. And as you can see, 1, 2, 3, 4, 5 tests, 6 tests. I'm in bed at this point in time. This big fucking jackknifing wipeout Darth Maul lightsaber candle is the I think that's the Australian Central Bank rates announcement through the nighttime session, Asian session. Now the thing with these horizontal levels, 1, 2, 3, 4, 5. The more times the horizontal level is tested, the more likely it is to break. But you don't just, or I don't anymore. I don't anticipate in that happening. And you know, I mean, once upon a time, I would just count 1, 2, 3, 4 divergences here. Well, hey, and I would have framed maybe a trade against this structure, expecting that to keep going. And what happens? Market comes up, stops out, and then comes down again. There'll be countless retail traders that have fallen for that one, obviously. So this is another way of doing these. Right, oh, well, this is now the 6th test, but until it breaks, you've got to assume, until it breaks and confirms, you've got to assume this is just going to, like, you know, I mean, the trend on the higher time frames is up. So, I mean, your bias is, well, you don't assume anything is what I'm saying. Now you can start to think, right, if this holds down there, now you can think about riding that short. Now, because this is such a well-tested level, in this instance, what I would do is I would go down to the 5-minute chart to look for a signal to trade this. So instead of trading this on the break, we'll go back up to the 30-minute. I don't trade breaks. I don't trade breaks. Now, if you traded breaks, you got fucked over there, and maybe you get fucked over here again. Who knows? So don't trade breaks. And if you were to trade the break, I mean the conventional way, this is the retail way. You know, if you're going to trade that break, well, we'll just say that you hit it with a stop market order there. And where have you got, where can this possibly run to? We'll just scrunch up the chart a bit, and I would say you've got clear resistance zone. It should be respected as far as like downside targets are concerned, at any rate, right down there. So, well, what's that risk toward? Not very good, not very good. So, what does join a retailer do? It's the way I would be personally looking for. You know, this is what I would have done once upon a time and still will do in such certain circumstances. You're looking for a retrace up to that level, and down there it goes. That gives you a lot nicer risk reward. But of course, you know, when you're right, the chances of getting filled there are very, very slim. And if you do get, which leaves all the times when you're wrong, when you actually get your order filled. Another thing John a retailer might do is go, well, that isn't very much. That isn't very much. The textbooks say I've got to get 2-to-1 risk reward to lose. So you'll just do this. Where's 2-to-1? That'll do. Now, in actual fact, I think on this occasion this might even have worked. I'm not entirely sure. So that's another thing you'll do. But you know, I mean, yeah. I may have worked this time. I might be mistaken on that. May have worked this time, but I mean, nah. Most of the time, that's a low probability trade. That's a low probability trade. You want to be as high probability as possible, especially on the low time frames with tight stop losses. So with all that said, where are we? Now, if this is just going to break, or if it being the sixth time, this is going to break and just keep going, what's the chances of getting a nice, clean BCR on the 30-minute chart? And then where's your downside target anyway? Something like down here, something like down there. It's, you know, it's a bit tight down there. Down there's a reasonable target. So what we're going to do is we're going to go down to the 5-minute chart for that, and we're going to see how that plays out. So there you've got that key level of supply and demand zone green drawn on the 30-minute. Green suggests to me I originally put it on the 1-hour chart, so that should be turquoise, but whatever. And this grey one's just showing you the structure of the move down. So what I see is you've got a break. We'll get the high Kanashi candles on, because this is the signal. This is the signal that Mark Snorbury teaches on the site that I recommend you check out. So you've got a break in the close and you don't have a retest. We can call that a retest, I think. You can call that a retest of this level. Now, obviously, this was drawn in after the fact, and this is where it gets a bit jiggery-pokery, because this level, it wasn't actually retested. But of course, if I'd drawn it in differently, now I did dick around with that, didn't I? Now, had I drawn that in to include that low, had I drawn it in to include this low in its entirety, and just down, just there, include that one, had I drawn it in like that, then all of a sudden it does become a break, close, and a retest on the 5-minute chart. So worth bearing that in mind. What else can we say? We'll just not ignore the momentum indicators. Well, they're all bearish. We said at the start of the video that the 4 hours looking bearish momentum there with the confirmed divergence, bearish divergence. 30-minute bearish, 15-minute bearish. You do have, of course, a bit of a divergence sneaking in there, and this is where it just takes a trader eye to know when to ignore that and when to pay attention to it. We're ignoring that because you've just got to break the very key level, as I've just spent like the last 10 minutes almost pointing out. So we are where we are, and now what we've got here is you've got this level for me is now confirmed at that point, and there you've got your three. This is the Marks Norbury sell signal. You've got a break, a close, a retest of a key level, a supply and demand zone, and there you've got your three Heikin-Ashi continuation candles extending below, creating a new pivot low. And so this now for me, this you take a leap of faith and you go, right, that's a valid trend. And the way I do it is for these ones, I'd want a 123% stop loss extension. So there's your logical pivot, which I'm drawing a trade box from, and we'll go 61.8. Now don't risk just up to there, because you know price could easily come back up there and just retest that, and a bit of a dick fuck moving down it goes. Could easily. Max Norbury, he'd have a stop loss away up there. I'd be happy with it sitting just up there, which is above this S&D zone as well. Should maybe tighten that up. That's a little structural one there, drawn at the point where this rejected and created a new low. So that for me is the trade parameters. Where did we say it was? I think it was something like down this. It was down here. It was down there. That's the target area, which maybe just go up to the half hour to show that it should all be there. Yeah. So that's the target area down to this previous supply and demand zone drawn off of the 1 hour chart, i.e. green. So back to the 5 minute, see how that one played out. So no entry as of yet. We'll go back to Japanese candles because the need for Heikin-Ashi is done. So no entry yet. I mean, I may have even entered that on a 55, but let's just say I didn't. I'm not sure if I did or I didn't. Right, what the hell? Go away. Don't need that there just now. Right, so you were just trailing it. We're trailing it from the last good pivot. That's the last good pivot, and it's the last good pivot not based on the momentum indicators, which are all telling you reversal, divergence, but it's the last good pivot based on price structure. Okay, based on the break, close, retest, continuation methodology. So we're just looking for, we'll move our trade box down, 61.8, and we're keeping our stop up above the 123% level. Did we get a fill? No, I did get a fill there because I trade with Pepperstone, which offer you a razor account where instead of the spreads being wide to give them the profit, apparently, not that they don't trade against you at any rate, they charge a commission on your trade. So I would have got in on that. If you're trading with a lot of brokers with a standard brokerage spread, you would not have got in on that bit of action, and that's how that one went. Or if you missed that, I mean, you could just keep doing the same thing. And so if you missed that one, then there's another opportunity. Just keep doing that. But your stop loss it's always going to be up there like that. And where I forget where exact. I think. Whoa! And there you go. So you got another bite at that. Now, obviously, anyone framing a logical pivot, anyone framing the trade against you, got away with it with that one. You didn't get away with it with this one here. All the time, the lying momentum indicator saying reversal, divergence. All these lows are divergence, but you don't have any reversal structure, and you don't have a reversal zone until way down there. The path of least resistance is to the downside. And I'll just finish that up now before it gets a bit too long-winded, which it may already be. Anyway, it gets there, and I think it gets a hell of a lot further as well. Right, so yeah, that's that one.